who else is here? We have Shailesh, we have Rahul, we have a great panel. Sid, over to you.
I think that's a sign. The founder of Mumbai.
Should we wait for more people to come?
His father's last birthday, so we have to go back at 8:30 at People, right?
Okay, so actually I thought we would do this from the point of view of the investor at a seed level. What we think the community needs to do from an investor's point of view to help grow and develop the ecosystem that we've been creating for a very short period of time in India. And it's seed stage investing, so I thought that we could actually start off by just quickly defining what we mean by seed stage in bullet points in like 15 seconds and not kind of speaking for too long. Rahul, do you want to like quickly bullet point for us and then we'll go around?
Yeah, sure. So for me, my day job is actually as a venture fund, so we do mostly Series A. But as a hobby, I do some angel investing and seed invest. Seed investing is pre-revenue, sometimes pre-product, but usually with some kind of product, and probably 12 to 18 months away from getting a real Series A funding.
Okay, so we're going to use one definition. Does anyone have anything, does anyone not agree? Just in case so we are all on the same page, so we can discuss that on that. Okay, great. So,
I have an intervention. Can I make that request? Can I do that?
You already have.
I'm asking.
You have the mic, sir.
Hey, come. So our next panel was going to be about Singapore and Southeast Asia, but we are extremely late, as you know, and people have flights to catch. Can I also involve them in this, right? And have a larger panel and more interesting discussion.
Amit can't fit here. Themselves as well. We'll just go from there and come around over here. Oh wow, what's this? They're coming from everywhere.
Anyone else? Probably more people on the panel than.
Dude, there are more people.
Can we get some Red Bull? Good idea.
Bridge, can we get some water over here? Like a lot of water. Do you want to? Would you like to introduce? We can just say name and company and kind of go around.
Just name and company.
Please, yeah.
Yeah, Roland from the Philippines, but my company is based in Singapore, called Telefon Transmedia.
Samir Narula, August Capital Partners, based out of Singapore.
Deepak, Shahdabpuri, DSG, Consumer Partners, based in Singapore.
Amit, Anand, Jungle Ventures, 27A, Singapore Airlines.
Vish Vishwanathan from Chennai Angels, based in Chennai, India.
Shailesh, Lakhani, Sequoia Capital, based in Mumbai.
Sharad Sharma, active tech angel investor.
Rahul Khanna, 13 Charlie, Indigo Airlines.
Sanjay Nath from Blume Ventures in Bombay.
Okay, great. So hey, we're in the middle of a panel over here. For you guys, we were just defining seed stage investing. What we're talking about is from an investor point of view and an investor community point of view, what do investors need to do to develop the ecosystem which is so young in our community in India? And so actually the panel is about India. So I hope you guys don't mind. But we can include like Singapore.
Invest in India. So.
Oh, okay, great, awesome.
Isn't Singapore the fifth best city?
Yeah, it is. Yeah, that's right. So we'll get Singapore as a metro, so it'll be the 7th metro in India. So we were starting to discuss how seed investing can develop and how the investor community can help develop and what needs to be developed within our community in order for it to succeed and flourish in the future. And we just defined what seed investing was. What I thought we could do, and Shailesh, I thought maybe you could quickly, right before we go into what the future should be, you could quickly tell us what you think, because Sequoia has kind of been around for a long time here and has looked at investments post-seed, but has also looked at seed investments, more recently. What you think have been positive developments over, let's say, the last 5 years in seed investing and the mentality of seed investors in India?
I think that obviously the biggest development has been the increased availability of seed capital. The number of funds that invest at the very early stage, when people are, a few people in a business plan or even just an idea, obviously has increased dramatically over 5 years, what we were 5 years ago. And the number of individuals like Sharad who do this very actively. So that's been the best part. I think looking forward, what we look forward to is more folks and funds who are more specialized and take bets where they can really add a lot of value at the earlier stage.
Okay. Sharad, actually, what do you think are some of the developments that haven't taken place that maybe should have taken place by now in the environment? Be honest and ruthless.
I think we have an acute shortage of seed stage capital compared to the venture capital that is there. So therefore, there are not enough venture-ready deals. It takes a long time. There's a long gestation period in India before a deal becomes venture-ready. And therefore, they need some capital. It ends up coming from customers, very slow process. So there's a big shortage, and that has to be addressed. See, that can only be addressed by local money for local entrepreneurs. It is not going to be Singapore money, forgive me for saying that, and it is not going to be the US money, because if it could be US money, it would have been US money at least in the Israeli ecosystem, where almost every startup is a global startup. And even in Israel, you need local Israeli money for seed investments in Israel. And that is true for China as well. So we got to unlock local money for local seed investment. Now, one, it can happen through the angel model, because high net worth individuals feel comfortable traveling in packs, and therefore money can be unlocked. The second is, I think we got to find a way for small M&A exits to happen. I mean, my favorite example is a company here called i7, which is there because S7 got sold for $8.4 million. What does an entrepreneur do? He goes and invests in a couple of other companies and feels comfortable in starting another company, all for $8 million exit. So we need 10 million, $20 million exits happening out of India. Now, if you just take 32 serial acquirers, which were mentioned in the last conversation, the Microsofts, Yahoos, Googles, Facebook, 32 acquirers in the US acquired 458 companies under $40 million just last year, of which Israel had 85 of those 458. India had 1. So I feel the real thing that we got to change, unlock money, is to bring money in the hands of either early stage investors or entrepreneurs by making sure small value deals, $30 million deals happen. And they will not happen because VCs like Shailendra make it happen, because they're not interested in $30 million deals. It will happen because there's another class of ecosystem that will come in, which will facilitate those deals. And unless both of those things happen, more local money, because HNI money coming in, and more small deals happening, we won't solve the money problem. And if we don't solve the money problem, we'll begin to see some of the venture capital starting to go back to the US because there's not enough place to invest. Right?
Actually, that's really interesting. This is definitely an issue in India, but in other parts of Southeast Asia, you see how we brought Southeast Asia into this. In other parts of Southeast Asia, do you see the same kind of issues? Because there are so many different countries that are they're buying cross-country buying going on. So Singaporean companies are buying Indonesian companies or Malaysian companies. Do you see the same kinds of issues, or do you see them solving them in a better way than we have solved thus far?
What was seed defined as before we came on board?
It was pre-institution. Yep. So we've defined it as pre-institution. We've defined pre-revenue, pre-product in some stage at some point. But we can look at it as maybe pre-product or maybe product is there. So we can. It's pre-revenue.
Low pre-money.
Sure. Whatever you want.
I think, Southeast Asia definitely is ahead of India in that context. As a young fund in the last 3 years, we've seen 2 exits of $30 million each. And I don't think that's, anywhere on the cards in India right now. And, in that context, I definitely think, sort of support the hypothesis that we need to start seeing those, smaller ticket exits to have a more vibrant ecosystem in that context that then facilitates. But, to the contrary, Southeast Asia doesn't have any $100 million fund yet or any $200 million fund yet. So I think it's evolving in a very different curve. There aren't the billion-dollar plays. We've already got 5 from here. The largest e-commerce company out of Singapore that does Pan-Asian is probably at $250, $300 million valuation. So I think it's more bottoms up right now in Southeast Asia as compared to India, where there are a lot of large plays happening, but not a lot of single buyers happening.
So, Deepak, just to follow up on that, what are they doing at the $30 million level right that we haven't been able to do yet? And maybe you can follow that thought process on to say what you think needs to happen in order to get this right.
So I moved to Singapore only this year, and I still invest in India. And I think what I see in Singapore primarily, a little bit in Hong Kong, less so in the Philippines, I don't know, less so in Thailand and in Malaysia, is that there is a bigger push from government agencies to actually help build the ecosystem. India, we've gotten here. The Indian angels have gotten here, Mumbai angels have gotten here, despite the government. We've worked very hard. We go and lobby the government. Gopal's done a fantastic job. He's not here today on lobbying the center and the state to get things done. But we have a huge hurdle which we don't have in most of Southeast Asia. Singapore, on the other hand, Amit's a good example, right? He is investing in India. His fund is backed by NRF, which is a division of the Singapore government. And a large part of his investee portfolio companies are Indian companies, early stage, who have already started thinking about, we got to look beyond India as a market. So there are certain portfolio companies whose products are just better suited. And prior to this panel, I actually spent some time with Sequoia in Singapore. Sequoia in Singapore has 12 companies. 10 were relocated from India in the last 12 months, 1 from Shanghai, 1 from Silicon Valley. And they've just said, we have some interesting companies, many of them Indian, many of them sub-5, sub-$10 million revenue, that just can't access the rest of Asia from India. So what have they done? They've built an ecosystem to take Indian companies, relocate them in Singapore. And that's what's happening in Southeast Asia, right? You just have. And on the acquisition side, there are many regional companies. M&A in Asia has been going on for decades. Buying a $20 million company, whether it's tech or non-tech, is happening. I know 20 guys you could go to who are looking for profitable, cash-paying companies, and they'll acquire it. So the companies that are being purchased at $20 or $30 million tend to be, they've already ramped up, they're profitable, either in one product or in one geography. And the buyers are willing to buy them. It's just that in India it hasn't happened. I don't know why. Just Philippines?
Yeah. Did you have an opinion on that?
Sure. Yeah. So we're actually not an investor in India. So we invest in emerging Asia, which is ASEAN, and we opportunistically invest in the US. Like Jungle, we're a Spring accredited fund, Singapore government's fund, which they co-invest with us. What we will do with Indian
I'm not sure everyone understands that. Okay. Maybe just take, we don't want to go on forever on it, but the advantage that you have to put a little capital. If you
sure. So we're a little different from the NRF, where it's an incubator, which you have to put 15% of the money, and the NRF will put in 85% as convertible debt. We're a little different. For every dollar we put in, the Singapore government will match us with $1 up to $1.5 million per deal. At our one-way call option on simple interest. I don't want to explain that, but
it's a great deal. I think
it's a great deal. We're trying to set up a similar deal with the government of Malaysia. We're in talks with Indonesia as well. So we invest in ASEAN, emerging Asia, which is 650 million people, same economy as the same size as India, and about as easy to do business among the different countries as in the different states of India. So one of the things that's different in the seed ecosystem in Singapore, for example, is that there's a lot of money at the seed stage. In fact, that's a problem for us, because companies that should die don't die. They just stay, because the government will keep feeding them, and then there's other money that comes in. So we actually don't do seed investment. We come in post-seed, post-angel, pre-Series A. We'll stay through Series A. We'll stay in B. We might even stay in C, and then we leave. So we're a little different.
That's very interesting.
Hope that helps.
No, that does.
Okay. if I may add something, because this might be my last chance to say something. We're doing Asia, and then, you know.
We were totally going to ignore you, but that's
right.
all right. Go ahead.
Back to the sun. The thing that I wanted to add is actually quite different from their point of view. I wanted to address 2 points. How do we get the $30 million kind of valuation? And two, how do we kind of foster more seed, you know, nurture the seed ecosystem? And I'd like to take a tack on IP. Because it's not something that's often mentioned. I've heard a lot of the pitches, but a lot of the pitches, I look at it and I said, where's the IP in that? You know, so I think the challenge with India is that it's so huge, the addressable market is so huge that you could have an idea that's not even proprietary, that's not even unique, yet be viable. You know, in a country like Philippines, much smaller, 1/10 the population, even less than 1/10, you know, you have to think, it can't be just the Philippines. It's got to be beyond the Philippines. And some of our biggest products that we innovated, that I was a part of, went global. The thing that we invented back in 2005 was prepaid, phone-to-phone prepaid airtime transfer. You know, so if somebody wants to bum, you know, 50 rupees, you can transfer from phone to phone. I mean, so things like that that are kind of unique. So I want to say IP because one of the companies that I had invested in my previous VC life, and I ended up running after we were fully committed, we exited. But just last month, a company in the US tried to buy the patent portfolio for, you know, an indicative offer of like $8 million. So right there, that's $8 million just for the IP. That doesn't even include your, you know, your DCF, you know, whatever the valuation. So so IP, I think it's important. I see a lot of ideas here, and going back to seed, I see a lot of seed. Like in the Philippines, a seed investor or an incubator accelerator approached me and said, hey, if you have any ideas, you know, we can fund, you know, we can seed $10,000. And I said, dude, you know, the last patent I filed cost me $10,000. So your seed capital isn't even going to pay for that. The reason I say IP also is that it's a good natural way to validate your idea. Before you even develop the product, look in the USPTO database and see if someone's done it already. If no one has done it, maybe there's a global potential for it. So even before you develop something, you know, because once you develop something, it goes public, then you've lost some of your IP rights, right? So, so maybe that's something I want to just add. I want to see more seed investors and seed taking an IP, how to leverage IP, taking an IP sort of. It's not the only, of course, qualification for viability and for a good investment, but I think it's a good metric, it's a good filter for, you know, for determining what can scale, what has global potential. So I guess that's just something I want to add. And of course, you need to match, the seed investment needs to match, you know, if a company has potential IP, you know, you need to size your investment accordingly, right? So I think that's something I want to add that I haven't heard much, and I hope it was useful.
In fact, we should, Vish, I think it would be interesting to respond because you're looking at companies pre-seed to a certain extent. And do you see IP-led value-based companies more and more in what you're doing, or are you feeling the need for more of this, or do you feel like when you're finding companies that, look, we have the potential of scale, if we can build a platform that can support that scale, we should be okay, and we don't need IP to create exponential value?
Good
because
question.
a lot of this will come out then as a result of that.
Good question, good point. I think Chennai Angels has been there for 5 years now, and it has evolved over the time. From having 5 and 6 members to now we have 50 members now, including individual investors, institutions, corporates. as well as overseas institutions. And our original desire, our original mandate was to predominantly look at businesses based in Chennai or in South India broadly. What we have recognized now is that the ideas are everywhere, so we don't limit ourselves just to the geography. We do have a preference for the geography because we want to be there to support the local entrepreneur, but we do also invest outside. This year particularly, we have done 5 investments so far in the last 8 months. 1 was outside the country in the US, and 2 out of the 4 are outside of Chennai, and 2 in Chennai. So it's a diverse mix. The other interesting thing about Chennai Angels, IP is very important. Our investor base of 50 members have very high level of experience.
How many of your companies are IP based?
Out of the 20...
That you see value because of the IP, not because of the scalability.
Okay. Out of the 20 companies in the portfolio we are holding today, I would say about roughly half of them have some strong IP, whether it's a product IP or a service IP.
And how is that going to change in the next 5 years, you think, for you?
No, there is strong intellectual property there. We do notice that intellectual property is something, sometimes it's hard to define. When people say, I believe what I have is something unique, well, it's at some point a matter of judgment and somebody has to rule on that. But what we see is that Chennai Angels also looks for the longer term. Out of the 20 portfolio companies we invested, we exceeded only 2 so far. So we invest for the long term, so we work with the entrepreneur, engage in the business, and financial capital is only one of the capitals we're providing. We're providing experience capital, networking capital, so we bring in customers for them, we bring in experience of our own members, and as diverse as our investment companies portfolio, we have 20 companies and probably 16 different business verticals. The 50 investor members also span a wide variety of verticals. So we have the ability to evaluate or mentor or even help any kind of company that comes in. And what we are seeing more and more now is that previously we used to look for companies that had what we call traction, but they have some sort of revenue. What we are seeing now is that after the experience gained in looking at these companies, we believe we could get a higher value for ourselves if you look at companies a little bit earlier, like what you mentioned, people who probably haven't gotten any measurable revenue, but the cusp of making money, and the idea sounds generally attractive, and we have bullish on the uptake in the market. So the last 3 companies we invested, they had very little revenue when they came to us, and we're happy to note that all 3 of them doing very well in terms of meeting the targets, and some of them are growing at 200%, higher than what we targeted actually. So there is opportunity, and we are excited about doing more of that. Second thing I would say for the ecosystem is that up until now, Mumbai Angels, Indian Angel Network, Chennai Angels, we never actually worked together very well. We weren't collaborating well, but in the last 12 months, the last 3 deals we've done co-investing with Mumbai Angels and Blume, and Mumbai Angels and others. So that gives us enough deal flow, number one, and also gives us enough bandwidth for us to evaluate deals and put money there. So all 20 portfolio companies, we're very proud, and we put in companies that are very unique, like industrial probiotics. We don't think about that as an investment, but we're done industrial probiotics. Tech companies, real estate, education, what have you. So fairly agnostic, fairly risk-taking. The new members who have joined in the last 12 months are reasonably younger than the previous set of people who are there. So we have a mix of good experience and risk appetite, which helps us to take a faster decision and maybe more aggressive decisions on investing than what Chennai Angels used to do. So we are looking for deals. We have 50 investors. We have quite a lot of money that we would like to invest.
Okay. No, that's great.
So we would like to have people come to us and tell us their story, and we'll take it forward.
Okay. So what I want to try to do, I add 2 basic themes, and I want to go really quickly through some of the funds that are here on the India side as well as on the Singapore side. We're in a place right now where we can make a real difference for the future of investing in this sector in India. A lot of in the U.S. there's been a lot of hue and cry. I wanted to refer to the Foundry blog that came out, and I'll start over here, and maybe between Sanjay and then Rahul and then Shailesh and Amit and Deepak and Samir, you can very quickly just give a reaction and see what your thought is, so we can go through it. He basically said that people are forgetting that the purpose of funding is to actually build a great product and build a great company. Instead, people are funding for the sake of funding and getting the next round of funding. And the money, and people are talking about how much money they've raised, and they're not talking about, oh, I'm going to build this great product out of it. And it was a little bit of a rant, but it was a mentality. And as a result, there's not enough focus being given and support being given by investors at a very early stage to help develop the teams that they are funding. And so if you could, and that's what he felt was going on in the US. I guess very quickly, do you think that's going on in the region that you're investing in? So Amit, you can look at more than just India, but do you think it's happening in India? And if it's not, more importantly, what can we do now so that we don't fall into that trap tomorrow? Because even today, at least when I'm looking at, when I'm looking at companies, I find guys that just want to raise money. They're not thinking, oh my God, and you don't want to fall into that. So just quickly, if we can go around that, is a thought.
I think that's a very fair comment. It's not uncommon to ask a company and ask how you're doing, and they'll say, we've funded through Series A, but that doesn't really tell you how the company's doing. Karthik and I were at a conference recently at Pre-Money, the good friends of Rajesh, Dave McClure organized this, and it was really interesting that more than GP and LP and exits, one of the most common term that was used was platform, building a platform. And I just wanted to go back to what Sharad was talking about earlier, that we think, in our views at least, the platform is one way you can help build a company, right? I mean, in a sense, you funded the company, you've picked good entrepreneurs, you've got to let them go. But from in terms of automating the co-investment syndicates, to helping them with business development or operations, to even maybe having an in-house or partnering with building an M&A strategy, or even partnering with cross-border co-investors. The platform can play a huge part. So I think we are getting into that trap in some way, and the lack of exits hasn't helped. Because when you don't have exits, you have to focus on taking them to the next round. But I think at the same time, if companies and if venture funds, seed funds can help build platforms to help their companies, truly scale, I think that can go a long way. So I'd agree that that's needed.
Okay.
So I think there's actually in the last few years, there's a lot of work that's happened in educating entrepreneurs on how to pitch, right? I think there's not enough effort that's gone into saying, what's going to create value, right? And I think what we've tried to do is we built a small platform. It's called Startup Catalyst. And it's actually sponsored by Canaan, but it's meant for the startup industry. And we started by saying, it was a concept. We said, let's throw a bunch of content on it. So we made 50 or 60 videos. These are 5 to 10 minute videos. We're trying to celebrate founders. We're trying to ask them tough questions. We're trying to figure out what they did right, what they did wrong. So we threw all that up. A few people turned up, not enough. We then started to supplement that with more specific guidance on ESOPs and hiring and things like that. So we created some vertical content clusters. A few more people came. And I think what we realized is what people really want to do is talk to us, right? And talk to other experts and things like that. So what we're now starting to do is use that platform to do Hangouts. So this month, on Startup Catalyst, we started a little campaign. So if you're an entrepreneur or thinking about starting a business, it's no hang-ups, just send in an email to us. We'll try and schedule a 10 or 15-minute chat with you. Because many times, I think people try and grab hold of many of us at these conferences, and there's just not enough bandwidth, right? So what we've decided to do is use technology to level that playing field a little bit. We can't be everywhere all the time. So we're starting with just having Canaan on the other side of the camera. But I think over the next 3, 6, 9 months, we'll bring in other folks that entrepreneurs can pose questions to and have these chats. So I think we're just trying to democratize information access a little bit, which I think is still bottled up in small events like this, right, or such large events.
Yeah, not like this.
See, my view is somewhat different. I think we need to step back away from the valley as it exists today, right? So this year, for example, I've had 3 companies that have found follow-on funding, right? 2 of them are globally focused. In fact, Unboxed, when we invested, we as investors thought 8 months later should be ready for VC funding, right? But for heaven's sake, it still took 16 months. eventifier, took a long time. And the one which is India market focused ended up taking years before it became ready for VC funding. So my view is that we are actually at 1995 in the valley when it comes to US facing or global facing companies. The velocity of building out the company, the gestation period, is that of 1995. It's not of 2010 or the Y Combinator era. I don't think we'll get there in a hurry. So we are, however, at 1995. If you are a US facing company, it'll build out about the same rate at it used to build out in 1995 or late 90s in the US. But if you're an India facing company, you're actually at 1975. In 1972, Kleiner Perkins had its first fund, which was an $8 million fund. And did it go back and raise money 4 years later? No, it took it 11 years before it was able to go back to the market and raise funds. And at the kind of people who were running that first Kleiner Perkins fund were all operating managers. They had to sit down and help the business build up. So for the India market, we are at 1975. So to my mind, if I look at an India company, I just allow for long gestation period. Because as an early stage investor, I got to be a patient investor. I got to get involved from an operating perspective, because only then will it become scale ready. It may need VC money, it may not need VC money. And if it's a global facing company, it will still require effort and time. And just the way you needed to do if you were a Sequoia in the late 90s. I think this whole idea that India will somehow become as quick and as fast, or even Southeast Asia will become as quick and as fast as Y Combinator thing is, where in 9 months you will know the dogs eat the dog food, whether you're in the consumer business or in the enterprise business, is just impossible in the Asian market today. It's not going to happen. And so I think we have to step back and look at those models, the 95 model and the 75 model for India, rather than the Y Combinator model for India.
Let me change it up, actually.
I think the GSF team is going to go to the nearest bar and then crash. But we'd love to hear from the rest of you, so please tweet #WhereDoWeGoNow. Tell us what you liked over the last 2 days, what worked, what didn't work, and what you'd like to see more of next year, so we can make next year even bigger and better. And finally, and a big thank you to everyone, our speakers, our EIRs, the startups, our investors.
Where do we go?
Thank you. We leave you with this.
Where do we go?